Hi, good morning, everyone. Come, let us prepare, make some good profits this week. I'll start with the prep for the week and first half of the video. The market left us very big clues. And in this video, I want to talk to you about how to be looking out for the bounce, because that's probably what most of you are looking at. But before that, before we get to that, it's very important you understand some very, very important key macro structure right there. And a big part of that is understanding first the intraday algorithms at play. So on Friday, this was quite important because there was some context on Friday. And if you need some refreshing, this was Friday. Was a large red candle. After the gap down, continued heading down the bottom Bollinger right there. And I'll make some explanations right there. So it's important you understand things like that first. But before that, we take a look at the Friday intraday analysis. Discord members, please remember, end of day summary right here. You just have to click into this and you have the intraday analysis. Throughout the entire day, I would provide the analysis like that. More information links in the description, so please check them out. I would suggest that you join the Patreon even as a free member, just in case I don't get a chance to be posting on YouTube, so you will not miss any analysis, because I will keep you informed on Patreon if such. There are free options, so please just join the free options if you can, so you don't miss anything. Now, firstly, very importantly, this one. Now, this was at Thursday at 1 p.m. You see this here, right? I want to show you where were we at on Thursday, 1 p.m. And if you watched my videos enough, you see watching my videos on a daily basis helps you to chain up the thought process. And so what you have picked up from a prior day can be applied if it comes into fruition, or there is a certain application I can use to teach you. So here on Thursday, this was important, right? And that's why you watch the videos daily. It wouldn't take up more of the time, 8 minutes, 10 minutes, probably a little longer on Sundays. But if you latch them together, you will certainly learn something. Right, so this one, Thursday, take a look at the timestamp at 1 p.m. Now, Thursday at 1 p.m. was about here. This was Thursday at 1 p.m. right here. So this was Thursday at 1 p.m. Eastern. Right, you understand this? I wrote this. I wrote 5-day continues trending down tomorrow, which was Friday, if we open below at 6:49. And you see how we started trending down, and this is a big clue of how the 5-day will start. And this is the 5-day. This yellow level here is 5-day. And a big clue how the 5-day will start trending down. Now, at that point in time, right, this is very important information, because at that point in time, when you take a look at a daily chart, a very big clue that I told you was when we are trending down in the bottom Bollinger. Now, this is after the trending down the bottom Bollinger happens after you see 5-day crossing below 20-day moving average here. So this red line is 20-day, this yellow line is 5-day, and this blue is your bottom Bollinger. All right. So I mentioned once we started trending down the bottom Bollinger, when the 5-day crosses below the 20-day, what you want to be worried about is if it continues to bounce down the 5-day moving average. So at this point in time, 5-day moving average becomes a very important indicator, because this is where the liquidity continues trending down together with your bottom Bollinger, and you see that happen, right? Now, there are obviously the 20 days is very, very beautiful resistance as well. You see that happening twice, as well as your 200-day. You see it happening twice as well. But generally, you see how 5-day continues trending down together with your bottom Bollinger. So understanding this is very crucial. And this is why, with that understanding, this becomes a very key indicator for you to understand together with my analysis. I talked about this as well in one of the videos. I think it was Wednesday or Thursday. I think it was Wednesday, where I talked about the possibilities of 5-day starting to trend up after plateauing. And you don't see it trending up at all because you're able to calculate that it is still continually trending down. Now, I talked about this quite some time ago with another example. So if you've been watching my videos, thank you, because you have probably caught the Netflix trade here, isn't it? I talked about how, so this was a very classic example I talked about back then, probably a few months ago. I told you that beware of the falling knife, right? That's what they call it. Because once the 5-day starts to continue trending down, you see that the bottom Bollinger follows. Just take a look. It's absolutely beautiful. And Netflix, in this case, continues very firmly down the 20-day moving average. When did I mention that the bounce will be coming? When firstly you see that the bottom Bollinger is plateauing, right? Now, this is not a good enough indicator, right? Because you see bottom Bollinger is also rising here. More importantly, when you see 5-day crossing above 20-day, right? And you see how we retested upper Bollinger. And if you bought it here, right, because you were waiting out for that possible bounce, you would have caught that gap up because of some news catalyst right there, right, all the way to 100. Beautiful trade right there. So obviously, one way if you want to continually invest in the company you believe in, especially when it's down on the bottom Bollinger. Now, you understand this very simple logic here. If it's at the bottom Bollinger, you don't go all in. You never do, right? When you invest into something, you always invest in tranches. You don't invest everything all at one go. You understand that logic? So if you were committed back then with Netflix, for example, it's not that wise to continue down because there were negative catalysts right there and you see it's a falling knife. But every time where you see the possibilities of re-entering the trade, you certainly can. Right, you put in 10% of your designated funds here, 10% here, 10% here, 10% here, 10% here. And once you see some more confirmation, this is where you put maybe 20, 30% of your designated funds into that particular stock. So you understand that logic here. Now, if you're trading options, obviously, there are more complex ways you can play with this, right? So you can open, for example, diagonal straddles, right? And thereafter rolling the losing leg while keeping the winning leg open, and then using the winning leg to fund your calls thereafter. Now, I will teach all these in future. But the point is, if you're trading options, for example, the complexity of options will allow you a lot of flexibility. But you have to know and learn how to calculate them, right? But anyway, understanding this, what I was trying to tell you is, you understand that this falling knife was something that I talked about, and now you see it happening on SPY, right? So don't forget, what I'm going to talk about today is what are you supposed to look out for to anticipate a certain bounce, right? So now, at this point here, well, obviously, you do see bounces here and there, right? And you notice that the bounces always happen to the 5-day moving average. So yeah, there are certainly ways to bounce this, right? So you see there are small bounces here and there. Yeah, it happens because there are times where they have to, in this case, what we call covering shorts, right? Take profits. So there are sometimes bounces here and there. And you see that here, this is a 30-minute chart with the 5-day moving average here. You see the bounces are, yeah, it happens. So small bounces with 5-day moving average, that's not what you're trying to look out for, isn't it? Because there's a bigger indicator here I will talk about later in this video. But you have to understand the basics first. All right, on Friday, because of that context, right? So this context here, you understand that there is a possibility it may trend down. But there is a bigger clue on Friday I want to show you here. Right, that is this beautiful magenta algorithm here. Now, these are algorithms that we identify on the day where you can see that these sellers are building liquidity for a bigger leg down. So this was Friday at 10 o'clock, 10 a.m. Right, and 10 a.m. was right here, 10 a.m. on Friday. So on Friday, we already identified this magenta. Now, I will talk a little bit about this magenta in a bit, because you see that, well, firstly, it's penny perfect. You see that, isn't it? Right, and thereafter as well, this orange that started rebuilding liquidity as well, forming that beautiful head and shoulder pattern on the way down. Understanding magenta is absolutely crucial, right? Because you notice that it spewed over a little bit from pink, but penny perfect magenta right there. Just take a look. Penny perfect, and this was identified at 10 a.m. right here. Absolutely beautiful. And let me not remind you how far down it went, right? So if you're trading futures, this is absolutely beautiful for you, right? If you're trading the ES, if you're trading the minis, wow, this is absolutely beautiful for you, right? Because it started trending down. You don't get, maybe this one stop hunted you, maybe, right? But otherwise, if you're well protected, this went down in teal. If you are able to nurture your runners in teal, this is just a payday for you right there. Especially most of you who are trading prop firms, you're trading the futures, right? So you have to learn to take advantage of managing your runners like that, right? You understand that. So obviously I could open another class to talk about how you can maximize your prop firm earnings, but use what you can with what I'm teaching now. Even though I'm teaching the SPY, it's the same thing as the ES. Even though I'm trading options, it's the same thing. In fact, it's even easier if you're trading futures with what you're learning here. So I'm trying to scale this up to the highest difficulty, and this is why you see I'm trading 0 day to expiry. I'm trading the SPX, right? I'm trading options. To me, I want to scale up to the highest difficulty so that when you learn what I'm teaching you, you're able to apply it to even simpler renditions of what I'm doing. So in this case, SPY, or you can trade the ES, the mini, the micros, whatever, or you're trading futures, or even you're trading stocks. You're just buying and selling without margin. These concepts become very easy for you. But thereafter, right, understanding the magenta, there were two more contexts you have to understand this, which I talked about on Friday. And this was live analysis. So please, members, please do review, right, the analysis on that day, so you can chain up your thought process. You can think like I do on a live trading session, right? So it's important. You have to do that, right? So I talked about how, at 10:52, right? Talked about this. I told you at 10:52, right? So this was 10:52. I told you how until the cups is closed, magenta can still be in control. And exactly as you see it, magenta remained in control here. And this was crucial because I talked about this again at 10:52. So 10:52, this one was 10:52, right here. So this one, 10:52, which was about, 10:52. Right? I told you, look out for the nested structure. And you see how magenta, while it's still in control, if you see magenta in control this way, this is another way to say that this is a bear flag, isn't it? Beautiful, right? So this is interesting. You see the magenta is still in control, especially with all these large green candles. So now imagine without the algorithms here, right? Let's just take them away for once. See it for yourself. If you're a trader, right, without the algorithms, before you even met me, you see the large red here, okay? You see a strong support. Strong support here. Double bottom. Oh, large green candles because of a possible catalyst. What do you think most people are going to do here? What do you think? Oh, they are absolutely going long here. Let me tell you that. Absolutely, they are going to go long here. Because they don't understand technical analysis. right? Whatever you learn, you have to be very careful. If you don't understand what you're trying to do, you are going to get yourself in a lot of trouble. And this is why there was so much sufficient liquidity to head down. Right, this grind down, for example, this is a classic example of the people who went long here, right? And it's grinding you down, it's boiling you alive. And you don't even know it, right? And you're being boiled alive before they break the levels here, before it heads down. Do I make sense, right? Strong selling, short bounce, double bottom, green, large green candle, recovery, right? And people are going long here. Do you agree? Before you met me. But you and I, we are not the same. Well, we are the same now. So we and them, we are not the same as them. Because we have magenta. So understanding magenta was absolutely crucial. And understanding the context here, as I was telling you, how as long as we are not closing the cups, magenta can still be in control as the bear flag. Can you see that? So regardless, double bottom, whatever, you have to unlearn whatever you have prior learned, because you have no understanding of what you've learned. Double bottom works, yes. There is a certain, well, there is a certain explanation to that, right? So I will teach you that next time, how to be interpreting it in better ways. But you have to understand, whatever you're learning now, it may not be the right thing, and you see it for yourself now. However, if you had magenta, now this becomes a different ball game, isn't it? And you see it, magenta, breaking out of the structure here. And if you were actually diligent on that day, you would be able to chart this other algorithm here. And just a pop quiz, if you were charting, and I wasn't there in the afternoon, just a pop quiz here. Do you see this? If you're able to see this algorithm, yeah, you're doing well. You're doing well. You're trading with me daily, and you're just learning to train your eyes to see the algorithms. And once you see it, you cannot unsee it. If you see this, you see the dual algorithm setup right here, isn't it? Wow! The market has given you a free gift here, right? Especially grabbing this liquidity here. So this becomes such a beautiful head and shoulder pattern with the dual algorithm setup here, giving you another beautiful leg down, right? Absolutely beautiful. Now, obviously, the other good trade here was, you could always prepare for the next setup, even though you missed that, right? So even if you missed this, fine, prepare ahead, set alerts, right, and get ready for your next setup. And in this case, my next setup will be the break. Let's see, the break of the pink algorithm, and you have one more leg here when this pink, which was the dominant algorithm throughout the entire day, has turned into some resistance here for that beautiful trade all the way down, at least in the final 30 minutes there. If this was not on the Friday, I would have certainly found a way to make money with this, make more money with this, but I would be I'm very conservative on Friday, especially when I've made enough money for the week. And so must you, because remember, at the end of the day, your objective is to feed your family. So you have to remember the objective. You're not gambling. You're not trying to prove yourself wrong or prove another person wrong. It doesn't matter. If you have enough to feed your family, you take that money and you buy food for them, right? That's what you do. So there is no need sometimes to be taking unnecessary risks. So for most of you, once you've already made enough on Thursday, on Friday, what you do is you just take one trade just for the sake of it. You can leave a runner if you want to, and you leave it and you go enjoy your life. So on Friday, if you took a short, for example, you could leave one runner and you would come back pleasantly surprised, right? All because you have already done the hard work from Monday to Thursday. Absolutely, absolutely beautiful, right? Now, where do we go from here? Now, this was Friday. You understand that. Now, let's talk about the bounce. Yeah, Where do we go from here? The secret in the bounce comes from the upper Bollinger. Surprise, surprise. Now, I will not go to the mathematical formula for this, but just for the fun of it, if you understand, right, some of you, you want to understand what the upper and bottom Bollinger means. It's not hard to do that now. You can go check up the internet. Back then we had to study, right, literally with books, or be literally mathematically trained. But you understand that this is known as your Bollingers are dependent on your 20-day moving average, right? And they are just basically a standard deviation of the 20-day moving average, right? So if you truly want to put it down in formula, it will be sigma squared summation of x sub I minus your mu squared over your sample size. In this case, your sample size is 20-day. This is your daily closing price. Mu will be your mean. So this is your 20-day average price. And this is your standard deviation square, your standard deviation, right? Which is a variance square, right? So understanding this, if you want to, will teach you something very important. So if you're a math student, this is important, right? If you're not, I will simplify this, don't worry. Because you understand that there is a variance between the price of your daily closing price compared to your average price. And you, in a way, squared this. So you're increasing the variance of that price over a 20-day sample. So when that happens and your Bollinger doesn't move, this means something very important. This means that there is what we call a supply overhang right here. Are you still with me? Still with me? What does supply overhang means? This means that there are, well, in simpler terms, as I always say, orders that are stuck. Stuck orders there. When orders are stuck there, this means that there are people who actually bought here and are caught by surprise, and they have no chance to sell. So what happens when they have a chance to sell this? Where do you think they're going to sell this? Where do you think they're going to sell this, you tell me? They are going to sell whenever there is a chance where it starts to bounce. So whether it's 5-day moving average, 20-day moving average, or 200-day moving average. This is why you see them selling once we reach these resistance levels. And that's why you see there is this theory called the falling knife. When does this start having a potential larger bounce? When there is the upper Bollinger starting to return back to the average, right? When it starts to trend down. This is a very, well, if you believe it, this is a very simplistic explanation of a supply overhang, right? Using the Bollingers. Bollingers are quite straightforward. There's no need to complicate things, right? Because as I previously mentioned to you, if you want to be fighting with the algorithms, you want to be fighting with complex mathematical formulas, you can't win. So you have to learn to simplify things to your ability, right? Because the computer will beat you every single time. Every time, right? Even the best chess player cannot beat the strongest computer. That's the truth, right? So your competition is not the computer. So don't choose the wrong opponent, right? Your competition is against yourself. All you've got to do is find profits in the charts, feed your family. I want to show you some examples, right? So let's take a look at Liberation Day then. Once again, falling knife. This just happened just last year. Falling knife, right? You see, supply overhang. So therefore, the selling continues as much as they want to bounce this. But once you see that the supply has no longer overhang here, once the upper Bollinger has come down closer to the mean, the bounce becomes more significant. You see that happening, right? And obviously we still rejected down one more leg down, and you see how the upper Bollinger continues to join closer to the mean, right, before we have that more significant bounce up before we continue. All right, let's take a look at Netflix. You see it for yourself, right? You see for yourself Netflix there, right? Once the upper Bollinger as well considered coming down, you see there is a, well, this is a consolidation. This is not a bounce, right? You can obviously tell this is a bear flag because of the consolidation there, right? But once the upper Bollinger comes closer to the mean, right, the bounce becomes more likely. So pay close attention to that. Right, Netflix is not a great example. Why? Because 200-day, we were under 200-day throughout. So you want to be paying close attention, because once, well, there's always a saying, if you're under 200-day, you are technically in correction, right? There's always this very simple way of explaining this. Okay, besides the point. Remember I talked about how there's a likelihood we retested 200-day. That was about a month or two ago. Why? Because I told you that our bottom Bollinger was trending there. Right, remember that video? It's a long time ago, I think. I said that, hey, our bottom Bollinger has been there. There's liquidity there, 200 days prime there. So I told you both bears and bulls will be interested to get there. Right, and sure enough, here we are, 200-day, and we even broke below it. So until, well, obviously, I don't know the future. I don't know what catalyst there can be. Right, because you can have a crazy day like this. But if the insiders want to do this, they would be smart to wait for liquidity to be on their side. Because remember, if there's someone who's selling, someone must buy. So they want liquidity on their side as well. So even insider traders, they want liquidity to be benefiting them. You understand that, yes? So they would want, even if they wanted to inside trade this, right? Allegedly. I must be very careful now with the things I say on YouTube. Allegedly, they would be wise, right? If I were their counselor, firstly, I would tell them, please do not inside trade, right? Because it's wrong, right? But if they insist on technical expertise and not moral guidance, well, I would tell them, wait for the upper Bollinger to start trending down. All right, so this is probably what's going to happen. You wait for upper Bollinger to start trending down. It becomes easy liquidity if they want to bounce this. Where can the upper Bollinger bounce to? Well, at least 680. Right, if it gets to 680, this is a realistic target for potential. If it wants to bounce, this is possible. I'm not saying that it will, right? You still have to look. Remember, there's so many confirmation you can look out for, so don't be lazy. You can look out for 5-day. So 5-day must firstly turn into support, right? You must first also wait for 20-day. By then, your 5-day will cross above 20-day moving average, remember, right? Your bottom Bollinger will start plateauing and may trend up. Upper Bollinger catch up with the mean, and there where you have possible entries. By then you will see consolidation. By then you will see maybe possible catalyst. The market is cooling off a little, and you may see a certain structure in the 30 minutes or even on the 1 minute chart for you to know that there may be some recovery or short bounce. And most importantly, 200-day moving average. Remember Liberation Day, if you were trading with me, I told you, do not worry, right? Some of you missed that 50-point day, and I told you, hey, don't worry. What did I tell you to do? Do you remember then? Very importantly, I told you, wait for bottom Bollinger. You remember this, right? The videos are all archived, right? So you can search them. I don't worry. You can search them. I've said it. It's time-stamped, so I don't worry about being... Well, I don't worry about you forgetting what I said, because everything is... Once it's on the internet, it will never be forgotten. I told you, hey, wait for upper Bollinger. Sorry, I meant wait for bottom Bollinger to cross above your 200-day moving average, and you will not be too late. Even if you miss this 50-point day, I told you, hey, don't be greedy. Stay focused on the task. So if you bought then, right? If you bought it then, say you bought it here at the middle here, I was still below 600, right? At about 590. It went to 700, mind you, close to 700. So this at 590 to 700, you still made 110. And this is SPY, right? So if you're trading the S&P 500 index, SPX, or even the ES, you added 0 behind, right? You still managed to catch the bull 1,000 points. All because you understood the very technical analysis of bottom Bollinger crossing above the 200-day moving average. So just a quick recap. How many? Confirmation, first one. Bottom Bollinger, start to plateau, possibly trend up. 5-day, turn into support. 5-day, cross. 20-day, 20-day, turn into support. By then, your 5-day will be a key support because your 20-day is already below your 5-day, right? And upper Bollinger crossing below, right? To a more respectable level where the liquidity can both converge. So this is what I always say, this is known as your zombie, right? Because both bulls and bears will want the space, especially with the upper Bollinger coming down. So sometimes zombie trades are, well, I would say very lucrative if you know how to be scaling your risks accordingly to try to catch trades like that. And one more confirmation will be when your bottom Bollinger crosses above your 200-day moving average. Okay, very simple lesson on macro structure right there. Now, this is applicable not just for your day trading. Most importantly, I want you to learn this. For a start here, if your first time you're trying to dab your feet, get it wet a little with this, this is helpful for your swing trading, right? And obviously for your management of your portfolio, when you use options to hedge your risks, when you use options to try to build income. So these are very important ways for you to calculate your risks and calculate the understanding the pricing of options and how to be using that to hedge your risks or to maximize your returns, right? This is important, right? So you have to learn this. And when you do your long-term portfolio management, right? So you see, it has dropped 10%. It's only 10% correction. Everyone's panicking. Look at you and I. We're fine because we have puts. I always tell you this, right? I've taught you this a long time ago. I always tell you the simple way to do this, right? Is always hedge whenever we get to the upper Bollinger. You always hear me say this, right? To me, I tell you, this is known as my cost of doing business. I will never, ever scrimp and save on this. Even in a bull market here, you can manage this. Just roll it up. It's fine. Your puts will always save you. But the question is, this cost, can you defray this cost? Now, if you're running a business, right, you know that there is a cost in running a business. But what do you do in the cost? Now, I do this a lot back then in corporate structuring, right? I wasn't a VC, so we had to do a lot of corporate restructuring. What we do when you have cost of doing business, you learn to defray the cost. So in options trading, how do you defray a cost? How do you defray? A very simple question, a pop quiz for some of you advanced traders right there. How do you defray a cost, in this case a put? Let's say I'm taking a put. How do you defray the cost of a put? You sell covered calls, right? So someone has to pay for your puts, right? So you sell covered calls to try to pay for the puts, right? So this is the one-dimensional way to do that. Yeah, well done, sell the call, well done. So this is the one-dimensional way to do that. There are multi-dimensional ways to do that because in options trading, it's well, how many vectors are there? We have time, we have price, we have the price of options, sorry. We have the price of the spot price, the price of the strikes, We have your Greeks. So you have your Greeks, which is, well, Greeks alone, you probably have at least 4. Just take a look. This is not just 3D chess, man. This is like 8D chess, 8-dimensional chess. So it's not so simple, right? You definitely will need assistance in calculating your risks for that. So it is not one-dimensional, which is why day trading is dimensional. You buy and sell. That's it. On that same day, you buy and sell. So believe it or not, day trading is not the hardest thing you're going to learn, right? It is the entry, right? So it appears to be hard because it's the entry point. But it's simple. You just buy and sell. It's one-dimensional, and it's done within the day. But when you get, and this is what I mean by you're 3 miles from home, right? You learn to walk 3 miles away from home, right? Go to school 3 miles. That's what you've got to do. Or commute at most 10 miles, right? You commute to work, to school within your neighborhood. But when you start to getting more complex, swing trading, this is 300 miles, maybe even 3,000 miles. You've got to first own shares. You've got to know how to manage the risk of the shares, sell covered calls, hedge with puts. But the puts, you got to know which time you got to take the puts. What's the strike of the puts? Or would you instead take a straddle, right? Straddle with 2 different dates, not at the same date. 2 different strikes, 2 different dates. You must know when to cut them or roll, which winning or losing leg, in order to maintain your risks. So the point is, once you have so many variables, what you need to learn is to find the common denominator. Life becomes easy when you have the common denominator. I will teach you this more in future. All right? So, when people tell you, hey, why don't you swing trade options? Let me just teach you this in a YouTube video. You don't fall for it. You understand that, all right? That's 3,000 miles. It's like asking, I don't have a good analogy for that, right? But it's like asking a 3-year-old child who can't even walk 1 mile. You're telling them to commute 3,000 miles, right? You're throwing them onto a plane and asking them to travel out to the world all alone. No, you're not going to survive that. And that's why so many swing traders, I like to put quotation marks there, they don't survive. You get lucky, yeah. Maybe in a bull market you get lucky. Yeah, but when this happens, this 10% correction comes, you panic. 10% correction and you panic. You're in trouble if so. Right? So understand that. Well, yeah, I think today's lesson is more about some macro structure, understanding of that. You will be, good analogy, right? Some good analogies in the chat. Right, so nothing changes. Don't deviate your focus, your objective, right? I've always told you to accumulate your wealth, remember? Right, so own assets, accumulate your wealth. This is not the first time you're hearing me say that. And only with assets can you start to earn income from them. And when you have more money, you can have more ability to maneuver around the risks. And so people who are making money in cases like this are people with spare cash or with already hedged positions. How do you do that? You must first have money. If you don't have money, you cannot buy a hedge. If you don't have money, you cannot continue buying in when it's going down safely because you are hedged. So what I'm trying to say is, don't be reckless day trading. Day trading will not get you rich. Take a look at the richest people in the world. None of them are trading per se. All of them own assets. If you're not owning assets, whether it's a business or real estate or stocks or a football franchise, some of you maybe, I don't know, right? I'm not going to doubt you in any way. If you do, just Give me a season pass. That's all I ask. All right. Anyway, yeah, be that rich person. So I get very angry when you're recklessly day trading, right? Because that money can be used to buy assets. You day trade as an accelerator. You remember that? How many times have I told you? You day trade as an accelerator, which means if you already made $10, right, you can take maybe $2 out for the possibility to make 20. This makes sense, isn't it? Mathematically, this makes sense. You see, this is an analogy. This is a mathematical formulation, right, of understanding risk to rewards. Right, so please, YouTube AI, don't flag me out for this. But you understand this. Okay? Now, day to expiry is well, I would say doesn't mean that when it's longer, it protects you. This is a false sense of security. Because if you're at the wrong strike, you can be at the wrong end of your margin for a long time, right? So don't be fooled. I'd rather you stay out of position and enter only when the time is right, instead of trying to force a long day to expiry. You know, you're locking up capital without understanding why. So don't let this be a false sense of security for you. I will teach you how to be using this to sell options, because there is a calculation behind it. You have to understand when does the aggression of the deterioration of value start. Once you can understand that, that is when you attack, right? But obviously, it's dependent on the movement of the charts, how far away it is from the strike, or in this case, understanding your delta. And understanding, obviously, there is another indicator here, which is your implied volatility. So options trading is complexly beautiful. I love it, right? And that's why it's, if you play it right, you can never lose. But just with, it's like a game of chess, right? If you play it right, you know you stand a very high chance of winning. Because it's mathematical formulas. But it differs. You see, that's the thing. I cannot run through it in a video because it differs with how much liquidity you have, how solvent you are, what your margin is, what your risk profile is like. If you're talking about me, I can hold it for 10 years. I am extremely solvent. I don't take more than 50% of my cash to put in position. Right, so I always have more than enough to cover my position if I need to. You see the difference? So I'm in a very good place, but you may not be. You may be in a very risky trade. You may stretch your dollar a little bit to try to build your capital. So it's different for everyone. So it really differs, and that's why it's important for you to learn the skill instead of copying somebody else, right? That's what I'm trying to do for you. So what I'm trying to say is also keep your expenses low. Now, the reason I can have very small returns is because my expenses are low. So I'm always able to survive. I don't have to take additional risks just to live a victorious life. And so for many of you, your objective may be wrong. You think of getting rich, and I keep telling you that. What does rich mean? And some of you are lying to yourself. You don't even know, right? You see a certain visual and you think, that's rich. But I implore you, go explore your life, right? Go explore your expectations. Go explore what truly makes you happy. You'll be surprised. You'll be surprised that simple makes you happy in life most of the time. So keep your expenses low so that when you're on the trading floor, you don't have to take unnecessary risks. And does that increase your probability of success? Does that increase your winning rate? Absolutely. I give you a very simple example, day trading, right? I just need this move here, for example. This move here, feed me for a week, right? With the amount of contracts I take, which is about 20, right? 20 to 30 per trade. Sometimes I take 10 if I don't feel like it. But if you have a big hole to cover, for example, like you and I were, well, maybe slightly different, right? Because my expenses are low, this is what I need. But if you say you have a $200,000 debt, a gambling debt, $200,000, and you have the unrealistic expectation of covering it in a day trade. Now, firstly, can you tell me how ridiculous does that sound, right? And some of you actually enter the trading floor with that sort of expectations. So you've already made a good amount of money with this move. But no, you've decided I'm going to hold it on because you're hope trading. You see, your mindset and mine are very different. So you hope, and then you get stopped, and you get into trouble. Sometimes you get lucky, and that's worse because it gives you false expectations in your life. So, firstly, most importantly, as I always tell you, is remember what I tell you, to keep your expenses low. It makes your trading life so much easier. All right, so much easier from there. Now let's talk about what's going on let's see, Monday. Let's see what to prepare for in the 30-minute chart. I am a little concerned with this, right? Well, there's some liquidity here. I want you to see magenta has been building a lot of liquidity, right? Little liquidity here, right? But otherwise, what do you notice? We have always still be in the selling continuation here, right? You still see we're still selling in a mixture of green and orange, right? There was a teal that I wanted to chart this, but it's a little confusing. I will do that when I find it that it's a little more relevant, right? I'm not convinced this was the dominant algorithm, but you can visualize it. Now, nothing's changed, right? You do see blue building liquidity all the way. I've talked about this many times. Blue here, right? The blue started building liquidity. This was talked about a long time ago, right? And then we have the second blue here, and this is why you see that we had that microstructure here on Thursday. And thereafter, from the break, I told you just wait for selling continuation, and true enough, on the break of this major blue, you have selling continuation. So that's great, right? So no surprise there. This is absolutely no surprise. So from now, what you need to be worried about is looking out for the 5-day. You want 5-day to continue trending now, right? And thereafter, if the market's kind, may not be on Monday, right? I don't think we will start seeing the blue algorithm on Monday. I may be wrong, but I worry that we may continue selling, right? In that selling continuation. So the first thing you look out for is selling continuation, right? A very good array of orange and green. Okay, and sometimes magenta, because you notice it's magenta that's the dominant now, in a way, right? Because near the top, we were selling at magenta. Okay, so pay close attention for selling continuation first thing on Monday. If there is any bounce, right, you have to wait for at least a magenta here, grabbing off that 640 level, which is at 639 yellow, minimally, right? And wait for cups to close at 5-day moving average, right, before the market builds more structure up. So that's the next thing you got to look out for. Otherwise, wait for retest of your 200-day moving average. It's never too late. By then, your upper Bollinger will trend down, your 200-day will trend down closer, your 5-day will already turn into some sort of support on the way up. So remember, I talked about that in the macro structure, the many confirmations you have to pay close attention to, right? List them out and watch them, study them, practice them, right? You're not going to miss out. If this continues to head down, right, if we do possibly see the blue algorithm building more liquidity again, it is only for a reason, for the liquidity to start catching up. In this case, your 5-day and your 20-day moving average. So just be careful if there's any short bounces. Obviously, you look out for selling continuation, right? Because you see orange is still aggressively selling. You see magenta is still aggressively selling right here. Sorry about that. Here, right here. And within the orange and magenta, you see very strong intraday selling in that green. And this is where we make our money, isn't it? Right? So just trade as structure demands. I think it's a short week, right? It's a short week this week, so don't be too aggressive, right? It's the start of the new quarter as well. So you have to remain defensive. There are some good trades, obviously, you can take, but take your chances and be very, very selective, because there are good moves. There are very good moves. You just have to be more selective. Discord members, please study the end of day summary. It gives you a simple understanding of how long and how frequent do you prepare your setups, right? Because as I always shown you, maybe 3, 4 possible trades a day. So if you're trading 10 times a day, right, you're doing it wrong. Okay, you understand what I mean. 6.5 hours, you look out for 3 trades. And for some of you, 1 and done. You just have to take 1. That's all. Well, it's not that hard. So stay focused. Right, we got this. I'll see you in the morning, Monday morning. Right? Yeah, I'll keep you updated on my schedule for Easter Sunday. I'll let you know. I obviously want to be here. Right? I want to be here every week. That's what I want to do. Right? To show you that, well, there's no excuse. It's consistent. It's the same as waking up. Do you wake up every day? Oh, yes, you do, isn't it? Right? Do you make a choice? No, you wake up every day. So the same thing, study every day, even if it's just half an hour a day, right? 15 minutes a day, that's all you need. Do that, and you will realize that you're clocking up experience on a consistent basis. You're building good habits, right? And you are constantly refreshing your mind and keeping it sharp. So that's what you got to do. Right, so thank you very much. I will be, well, if you're struggling, I'm running a prayer meeting shortly here, probably at 1:30. Around 1:30 p.m. I will keep the link. You can click the link here. Right, join me, especially if you're struggling as we enter the second quarter. If you're a believer, right, please come and join me. Just a quick one. Let's have a great, good start to the quarter together. All right. Thank you very much for watching. It's a little different today, right? But I'm giving you some, well, in some cases, synopsis of what to expect in the future, and it's going to be great. This is not even structured course yet, right? So I will be running the structured course very soon, and what's stopping me from getting there now is I need to understand a little bit more of your profiles. So if you share more of your trades, it will help me tremendously, right? You share more of your trades, regardless whether you're a new trader or a seasoned trader. It helps me. It truly helps me to know how to fine-tune things better for you. Right, so do that if you can. It's a big favor for me, while I also develop all the database of all your trades and all the resources here, so that in future the AI chatbot that we're going to have can help me archive everything better, or retrieve all the data, and to be organizing them in a much better manner, right? So that's I'm preparing the foundation for what's to come, and that's giving a little delay. So I apologize if you feel that the delay is a little unacceptable. It's for good reason. All right. Yes, it's going to be called Magenta. Absolutely. Thank you everyone for tuning in. I appreciate you taking the Sunday to study and to get better. I hope today's information helped you. All right. Thank you very much. I'll see you in the prayer meeting later for some of you. And for the rest of you, have a great Sunday. Have a good weekend ahead. I'll see you closer to opening bell.